Evening, students. I am going to walk through chapter 2, concepts of some of the assignments. So I've been getting a lot of emails and questions regarding how to do the assignment. So I'm going to try to walk through some of the concepts. I'm going to try to do this also for every unit or every chapter that we have an assignment. My goal was to try to post earlier in the week, though. So I was actually checking emails yesterday and noticed that there were several emails asking questions on this assignment. So I wanted to, instead of just respond to every individual student, I wanted to post the concept of how to do the problem. I'll try to post by Wednesday of the week. So for chapter 3, I'll try to do a recording on Wednesday so that you can see how to do some of the assignments. So hopefully that'll help. Still feel free to email me if you have any questions. Okay, I'm going to start by sharing my screen. Okay, so before you begin, print out all the pages in this workbook. Okay, so here it gives you some information about the balance that was on a general ledger account for Fitton Table as of April 1st. But as you go on to the second tab, there's some transactions, and then it wants you to do a T account, journal entries, trial balance, and then the statement. And that is the order of how you will prepare. You do the T accounts, you do the journal entries. From that, you'll put everything in a trial balance, and then you can compile the statement. Okay, so let's see what we have here. I printed it out. So I have my copies over here. So if I'm looking away, it's because I'm looking at my printed out copies. So let's start with the T accounts. So I've already started plugging them in. Okay, so if you go back to the the required, we have cash of 5,000, accounts receivable of 5,000. Now, cash and accounts receivable is an asset account. Asset has a normal debit balance. So in order to increase it, you would debit it. And it's telling you that here you have debits and you have credits. So it's giving you that information. Okay, so when you go to transactions, we have more transactions. And then when you go to T accounts, you'll plug the 5,000 in. So you have 5,000 in for cash, and then you have 5,000 in for accounts receivable. Okay, so you plug those two numbers in. Now let's look at transactions. I printed my transactions so I don't have to go back and forth. So hopefully you have yours printed in front of you. So I'm going to go over to the T accounts. So we collected cash owed by a customer of $1,000. Cash is an asset. So we want to increase our asset accounts because we said assets have a normal debit balance. So in order to increase our asset, which is cash, we debit $1,000. So number A, $1,000. Okay, makes sense? So for accounts receivable, it says for B, I'm looking at our transactions over here. It said we bill customers for tables rented to date for $1,000. We billed the customer. We billed them. We have not received any cash for the customers. We just sent them an invoice. And so accounts receivable is an asset. Asset have a normal debit balance. So we are debiting our accounts receivable for $1,000. Okay. And then C, it says we pay the following expenses. So we pay $100 for advertising, $1,000 for salaries, and then $500 for telephone. So that's a total of $1,600. Okay, so $1,600 came out of our cash account. So over here we have C. We're going to start with $1,600. We reduced our cash by $1,600. So cash, when you want to decrease it, it is going to be a credit. Okay, so it has a normal debit balance. So when you increase it, you debit it. When you take away or you're reducing it, you're going to credit it. So this is the debit side, this is the credit side. So we credit it for $1,600 to cover the expenses for advertising, salaries, and telephone. Okay, and if you come over here, you can look at your T account. So expenses have a normal debit balance. So we have advertising expense for $100. We debit that account and we put the C over here because it's number C. Salaries have a normal debit account because it's an expense. So you debit it for $1,000. And then telephone expense has a normal debit because it's an expense. Expense have normal debited balances. So you debit it for $500. So that is taking care of A, B, and C. Okay, let's look at the journal entry. So for our journal entry, let's see, did I print any journal entries out? Okay, So we know we had cash for $1,000, right? Because this is where we're recording the cash from our transaction. I'm sorry, I have my cord all over my keyboard. So I'm just going to adjust that here. So we collected cash owed by a customer. Okay. If we go back to our T account, we have our debit for $1,000 of cash. So over here, you're just going to type in cash, $1,000. Okay. All right. You collected cash from the customer. So we sent the customer an invoice for $1,000. They paid us the invoice. So we collected it. So it's accounts receivable for $1,000. We collected $1,000. Okay. And we are crediting that account because originally, if you think about it, remember we said assets have a normal debit balance. So accounts receivable is an asset. It has a normal debit balance, but we want to reduce that accounts receivable. So we're going to credit it because accounts receivable is being paid. Okay. So we're going to debit it for $1,000. Okay. Let's do B. So B was it billed the customer for tables rented to date. Accounts receivable, we're billing it. So we have accounts receivable for $1,000. And revenue, we can record the revenue. Revenue, income or revenue, whatever you call it, service income or service revenue is the same thing. It has a normal credit balance. So we're going to put service income, $1,000. Okay. And now let's look at C. We said we had advertising expense, we had salaries expense, we had telephone expense. So let's say advertising expense was 100 because advertising have a normal debit balance. And if we go back to our T accounts, we know we debited over here. So we're just going to do the same thing for our journal entry. Advertising expense, salaries expense was $1,000. And then we had telephone expense, if I could type, and that was 500. So we paid those and we paid it out of our cash. Remember, we did $1,600 over here. So we need to, over here, I'm sorry, we credited cash. So on our journal entry, we're going to credit cash again. Okay. All right, let's see what we did on our trial balance. I won't do the trial balance because a trial balance is a statement of all your debits and credits in a double entry accounting system, okay? We are doing double entry. So our total of cash, total of accounts receivable, total of whatever it is on a debit side and a credit side, okay? Remember, when you get to the bottom, it must balance. That is very important. And then after you do that, you can compile your statement, okay? And you pull all this information from your trial balance. Okay, and that is it. I hope this helped. Feel free to reach out if you have any questions. Thank you. Let's. Okay. My video will not stop recording. So I'm not sure what's going on here. I'm having an issue with stopping my recording, guys, so bear with me here. I don't know why I'm having an issue with this video. All right, here we go. All right, I got it. Stop.